This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set for a positive start as investors brush off trade war worries. Megacaps leading Wall Street gains, with Nvidia briefly touching a $4 trillion valuation. A 20-year Japanese bond auction today, putting the focus back on rising yields. President Trump unveiling new tariff threats, including a 20% rate for the Philippines and 50% for Brazil, sending the real tumbling.
And I'm Ed Ludlow, live in Sun Valley as tech, media and finance leaders are here talking about the war for AI talent. We're going to speak to LinkedIn co-founder and Greylock partner Reid Hoffman about where he sees opportunities.
And take a look at how we're setting up for the Asian market opens. We have seen Asian stocks gaining ground this week, despite the fact that, of course, there is some concern around President Trump's tariffs. We've had some monetary policy decisions already today. The Bank of Korea expected to hold the rate steady within the next 2 hours or so. Take a look at Nikkei futures at the moment, not doing much, but this, of course, after 2 sessions of gains already. The Japanese yen at one point overnight surpassing that 147 level against the U.S. dollar. But what we'll be watching will be the 20-year JGB auction, because remember, just last month, in May, actually, we had the 30-year and the 40-year yield surging to record highs. That was after weak demand for a 20-year auction. That had repercussions around the world, so we had really volatility in the Treasury space. Take a look at how we're setting up with U.S. futures, because we had already seen some gains in the overnight session. We were near record highs. Of course, we had Nvidia also becoming the first company in history to achieve that $4 trillion market valuation. We were following treasuries, as I said, as well, and curbing those 5 sessions of losses already after a solid 10-year auction. But what we'll be watching is, of course, the uncertainty around trade tensions. We've been watching emerging market stocks, Brazil, the real taking a hit, and all of this, of course, Haidi, to do with this new round of tariff demands coming from President Trump.
Right, and he has unveiled, Shery, as you say, this round of tariff demand letters, including this 50% rate on Brazil. This is one of the highest levies so far announced for the rates that he's threatening to impose from August 1st onwards. We are hearing that reaction now when it comes to the Brazilian President Lula da Silva saying that Brazil will respond to the U.S. using the reciprocity law. He says that Brazil will respond to the U.S. using that law, and that Brazil is a sovereign nation. This after Donald Trump threat to impose 50% tariffs on Brazilian goods, sending the real plunging. We saw Trump sharply escalating that dispute with LATAM's largest nation, the leftist leader, President da Silva there responding now. We're hearing these comments from Lula. The law that he's talking about was passed a few months ago, back in April, actually, when it comes to the trade reciprocity bill. Amid the ongoing threat of Trump levies, it essentially allows the government to impose trade, potentially environmental measures against foreign restrictions that happened just after Trump announced that 10% tariffs on Brazilian imports. Of course, that has now been escalated. Let's bring in now for more Bloomberg's digital politics editor, Remy Varghese, our Brazil and LATAM economy and government editor, Travis Waldron in Brasilia. So, Remy, let's start off with you. We've seen this sort of patchwork of announcements over the last few days of the countries that were sort of targeted today. How many are significant trading partners, and what are the levies that we're looking at?
Apart from Brazil and the Philippines, the other nations today are not significant trading partners, actually. Brazil is up there in the top 20. The Philippines is in the top 50. But combined, the other 6 nations, their imports to the United States only account for about $15 billion. I mean, he included Sri Lanka, which had imports about $3 billion to the United States. Some of them range from 30% to 20%. Obviously, Brazil came in much higher at 50%, and that was particularly interesting because the United States does not have a trade deficit with Brazil. So again, we were all a bit all over the map here when it comes to these announcements today.
Yeah, especially with the president tweeting about President Jair Bolsonaro, of course, a right-wing populist leader in Brazil, asking them to drop charges against him over that alleged coup attempt. Travis, so, I mean, This is being perceived, it seems, by President Lula as a political attack, interference in domestic politics. Tell us a little bit about the response coming from President Lula, because he keeps really emphasizing the sovereignty of his nation.
Yes, that's a common thing for Lula whenever he feels as if other leaders are interfering in Brazilian affairs, or potentially. It has been a word he's used a lot about President Trump in recent months. But the interesting thing about this is that it has actually been escalating over the last few days. This weekend, Lula was hosting leaders of the BRICS countries in Rio de Janeiro here, and they released an official declaration that mentioned trade-distorting tariffs and also attacks on Iran, which is a new member of the BRICS. They didn't specifically cite the United States, but it was not a very thinly veiled swipe at the U.S. and President Trump. And on Monday, on the final day of the summit, Trump finally came to the defense of Bolsonaro, an old ally who was facing that alleged allegations of coup charges, as you mentioned, and is set to go to trial soon. And Lula then responded in kind, telling Trump to mind his own business. So we've been sort of building to this moment. Brazil has kind of been off of the radar for the White House up to this point, but is very much on it now.
Travis, we've obviously seen the market reaction in real, in Brazilian equities, but are there concerns that this goes deeper than the sort of economic and financial markets repercussions, right? Because we know that President Trump's approach is it's not just about trade. Everything is on the table. Does this point to a broader kind of deterioration when it comes to what was previously a strong bilateral relationship?
That's definitely a concern. I think Lula is a leader who obviously had served 2 terms before this one, more than a decade ago, and was someone who got along well with George W. Bush and Barack Obama. Brazil has historically had strong relations with the United States, no matter the political ideologies or differences between their leaders. And so this is a market change. It's one I think was expected when Trump returned to power, especially given the differences between he and Lula and his old friendship with Bolsonaro. But it kind of has really erupted into view in the last few days, and I think it raises big questions about what's going to happen going forward in the relationship, and obviously how Brazil responds beyond Lula's suggestion that they will retaliate with trade measures or other measures of their own, because the Bolsonaro trial again is scheduled to go forward pretty soon. In the coming months is when most people expect it to start, and Trump is obviously saying he will keep a close eye on that.
And we're hearing right now from the Philippine ambassador to the United States and a mobile message to Bloomberg saying that the Philippines will be arranging a trip to the U.S. for tariff negotiations. Romy, could there be an extension past that August 1st deadline for some of these trading partners?
Trump himself has created a lot of uncertainty and confusion about this August 1st deadline. On Monday, he said that he wasn't 100% firm. The next day, he said there'd be no extensions granted. And today, we had a Treasury official say that, well, maybe the tariffs will come into effect on August 1st, but negotiations can still continue. I should say that the traders in the United States are largely treating this as we'll just wait till August 1st. Let's see what happens. With Trump, you can never say something is certainly signed, sealed, and delivered. I think if you're looking for clarity, you're not going to get it until perhaps August 1st, and maybe not even then.
Max Romy Vagis and Travis Waldron there with the wrap-up of these latest trade developments. And, of course, all of this has heavy implications when it comes to central banks. The minutes from the Fed's June meeting showing officials are divided on how tariffs might potentially have implications for price pressures. Some committee members saw a one-time impact. Most were worried about more persistent risks to inflation. Garfield Reynolds leads our Markets Live Asia coverage and joins us now. Well, much like, I guess, policy expectations from the Trump administration. Also no certainty when it comes to the eco outlook or Fed projections either.
Well, Heidi, that's very much, the sort of the dynamic that's going on. And if on the one hand, as we were saying, just stock markets in particular are looking at the blizzard of conflicting statements from Trump and his administration about tariffs and saying, okay, that means we can just decide they're not going to be a serious hit because they're not going to come in at really high levels, especially against major trading partners, so we can look through them. The central bank is not willing to look through them because it's looking at what is this going to do to inflation expectations, what is it going to do to actual inflation, to real-world economic activity in the coming months. It's going to take time for all this to come in. It's also a question of what exactly it does, the uncertainty, what that does to the business climate. Do businesses take advantage of the talk about tariffs to raise prices themselves if they see the opportunity, and what does that do to expectations? So the Fed, the minutes showed it very divided, and you would think they would just be more divided looking at what's going on. And they made it clear that they expect there to be some impact on inflation from tariffs. So until they see data that gives them a really good handle on what that impact is and how that's going to feed into their monetary policy decisions, they're going to stay on hold.
In the meantime, policymakers around the world trying to up fiscal spending in order to support their economies, and that's roiled the sovereign debt space, right? We have a 20-year JGB auction here in Japan, of course, has been very consequential, especially given the spike in yields back in May. What are we expecting when it comes to demand?
Well, I'm not quite sure what to expect when it comes to demand in Japan. It does look a particularly inopportune time to be selling 20-year bonds when we've got that upper house election coming very soon, July 20. So are investors going to be willing to take serious, to put in serious bids for the securities? We've had some reasonably decent auctions over the last couple of weeks in Japan. However, this month we've seen yields in the so-called super long space, that's 20 years and above, rise by 15 basis points or more. Just this month, and this month isn't more than a third of the way through. So in that backstop, you have to be concerned about what the demand dynamics are going to be. It's going to be particularly interesting too to see what happens with the so-called second non-competitive price section of the auction. That's been a key determinant. That's when primary dealers can take on up to 10% of what was sold in the competitive, the price setting auction. And whether they do take all that up or whether they don't, that has tended to say a lot about where trading goes in the secondary market after the auction itself. So there's several steps that are going to go on. We might get reasonable demand seemingly at the primary auction itself because the yields have climbed. But if we don't get that follow-on demand from primary dealers, then you could see yields jump later on in the day, something that's been a bit of a feature over the last week for longer end JGBs. So it's going to be a very tense time for bond traders in Tokyo with all of that going on. There's also the concern that any fresh difficulties in the long end for JGBs will spread to European debt, and potentially also we've got a 30-year sale in the US coming up in their day. That's going to be very pivotal as well.
Bloomberg's Garfield Reynolds there.
Yeah, and of course, we'll get more on the markets. Coming up on the Asia Trade, Greylock partner and LinkedIn co-founder Reid Hoffman joins us next, live from the Sun Valley Conference. Plus, we continue our conversation on trade with the Hinrich Foundation. Much more ahead. This is Bloomberg.
Well, the annual Allen & Co conference is well underway in Sun Valley this week, bringing together top executives in media, technology and finance. Let's cross over to the event that's known as a summer camp for billionaires, where Bloomberg Tech co-anchor Ed Ludlow is standing by with our first guest. Ed.
Right, and in the history of Allen & Co and Sun Valley, a big emphasis on M&A, but in modern day technology M&A, the acqui-hire is kind of a part of that marketplace, and the marketplace broadly for AI talent is the conversation, which is why I'm delighted to speak to Reid Hoffman, not just LinkedIn co-founder and Greylock partner, but a serial entrepreneur and somebody who has founded several AI companies and will continue to do so. And what I've learned is that $100 million is the clearing price in the market for frontier model AI talent. But we're laughing, but actually that's the debate here. Why is $100 million reasonable or unreasonable?
Well, so essentially, one of the things that's good about having an open marketplace of anything, including labor, is that you essentially get multiple bidders, and that's what sets a price. And so the fact that someone goes, I'm willing to spend $100 million in order to get this talent, you think, well, that's crazy. Why would they possibly do this? Higher than the vast majority of CEOs, et cetera. Well, if that one, what you're judging is that one talent will potentially create billions of dollars of value for you, whether it's in a social network, whether it's in, a search engine, anything else as a way of doing it. And so if you think that, then that's just a bold bet.
What Sam Altman, the CEO of OpenAI, said was that that particular figure, which he had accused Meta of offering to some OpenAI staff, what he claimed was it was crazy. But it sounds like it's not crazy, really.
Well, I don't think it's crazy when we know that AI is going to transform all businesses and all industry and the entire tech industry. And these are trillion-dollar companies, et cetera, at the high end, and a whole stack all the way through on down into billions.
Today, for a brief moment, one of them was a $4 trillion company.
Yes, exactly.
Please continue.
Yes, Nvidia. And so so saying, hey, this piece of talent is a risk-adjusted bet, that makes a difference in that, that's just a risk bet. You might say it's a dumb risk bet, but it's not dumb to do if those are the stakes you're playing for.
I'm a student of Silicon Valley history. You were there with respect. And there was a time where CEOs would email each other, and say, don't take my people. Okay, I won't if you don't take my people. We had the sort of poaching agreements saga in the mid to early 2000s. Is this different in this? Is it just the reality of a marketplace?
Well, I think it's much, I think when you email and say don't take each other's people, that's bad for antitrust, that's bad for labor laws, that's bad for the right thing to do relative to talent and people. Obviously, as the founder of LinkedIn, I'm kind of in the, hey, we should match the talent to its best possible outcome. Now, so that was a bad thing to be doing. I'm glad we're not doing it now. Now, what we do still, of course, want is we want people to engage in serious work at serious companies, and as opposed to like, hey, I'm being paid this much here this month and that much there this month. You've got to still be like, no, let's get the work done. Let's build the new future. That's more of my worry on the bidding, not whatever prices it gets to.
You are no longer a board participant of OpenAI, so I put that out there. But you understand the company and you understand its structure. Why is this sort of restructure held up? And is that having an impact on their ability to hire or retain talent, do you think?
I haven't heard that it's had a negative impact on their ability to hire, because everyone knows that OpenAI is one of the amazing new tech companies of the current batch. I think that the restructure it's a very challenging thing to kind of move from where a 501c3 to a public benefit corp, especially when you have lawsuits being filed and refiled and all of this, and academics saying it's a terrible thing to happen, and so I don't know exactly what the impediments are, but it's a challenging process.
If you were to guess, and again, I'm delighted to be sat with you on a day where there was such news flow, OpenAI and I.O., Johnny Ives thing, it closed. What do you suspect it is that they're building?
Well, so I don't know. I've never been told. But if it were me, I'd build a phone.
A phone. Because the reason I ask at the root of it is every day, how do I interact with a generative AI tool in particular, which is an app? It's through my smartphone.
Yes.
You?
Yes, exactly. No, smartphone. And look, I'm a little older. I still use a laptop every so often.
You have, as I said at the top, been a serial entrepreneur. Recently, you've also backed brain implant space.
Yes.
That is a somewhat crowded field. Why did you move into that area, Reid?
Well, it's a little bit different than brain implant. It's called Sanmai, and it's ultrasound. Now, by the way, ultrasound might actually be one of the really great things for both reading and writing for the brain, because you can read, but you don't have to stick things in, right? And part of the reason I backed it is because they're using AI. I'm basically an AI investor, to get this ultra low frequency, much less energy than your phone, in terms of focusing it on one part of the brain. The tool set for creating brain therapeutics on all kinds of things, anything from anxiety to serious, dementia stuff, it's an amazing possible tool set, and that possibility is the thing I invested in.
I found that so interesting that you moved into that field. I'm jumping around a bit, but across all of this is the anxiety of jobs. Many of your peers have come out and made bold proclamations of how many jobs will be eliminated by AI. I've not had the chance yet to ask you for your prediction, and so may I?
So yes. So look, the far future, no one really knows. Anyone who says definitively there's going to be lots fewer jobs, or definitively there's going to be lots more jobs, to say that definitively is to undercut the credibility of what you're saying. Now, I describe this as the cognitive industrial revolution. I think it has the same impact as the industrial revolution, but now in like knowledge work and information work and language work and everything else. There's both the good and the bad of that. The good is none of this of our current modern society works without the Industrial Revolution. That's what creates the economics and prosperity for a middle class, for for democracies, for Western societies, etc. On the other hand, the transition is very difficult.
Right.
But the transition into the industrial age was challenging. So I think we're both going to get the transition, which will be a lot of job transformation, initial job loss, eventually, I think, job regaining and transformation, and ultimately a lot of prosperity, but we need to embrace.
Let's tie this all together through Reid Hoffman, the investor. How have you adjusted your own financial planning and investment strategy based on the talent war we discussed, but also your jobs outlook?
Well, so I'm still investing a ton in AI companies and tech companies. And for example, people frequently say, well, you're going to need fewer software engineers. And actually, in fact, I think not only are we're not going to need fewer, I think we'll still have the, call it 10 million software engineer developers, across the, Western world. But I think what's going to happen is actually even you are going to start doing software development, because everyone's going to have a co-pilot for doing some of their tasks with a software engineer helping them.
Right.
And so we're going to have many, many more software engineers.
Reid Hoffman, Greylock partner, LinkedIn co-founder, serial founder of AI companies, and I guess one of the oracles and prophets of what's to come in the future. We'll see if he's right down the line. Back to the team in Asia.
We'll have plenty of software engineers all around us now. Ed Lutlow there with some great conversations from Sun Valley. We have more ahead on the Asia Trade. This is Bloomberg.
Let's get you the latest from the corporate front. And Linda Yaccarino is stepping down as the CEO of Elon Musk's social media platform X. The former NBC Universal executive was hired by Musk in 2023 after he'd fired or lost about 75% of employees at the company previously called Twitter. Yaccarino repeatedly defended her boss and the platform from critics who allege a rise in violent content, anti-Semitism and misinformation since Musk's takeover. Kellogg shares popped in extended trading, with Italian candy maker Ferrero said to be closing in on a deal. Sources telling Bloomberg that Nutella maker Ferrero is looking to buy the breakfast cereal producer for about $3 billion. A deal could come this week. More ahead here in the Asia Trade. This is Bloomberg.
Malaysia's Prime Minister Anwar Ibrahim will make an appeal for lower tariffs when he meets U.S. Secretary of State Marco Rubio today at the ASEAN meeting. Bloomberg's Min Min Lo joins us now from Kuala Lumpur. Min Min, what sort of conversation should we be expecting from these conversations?
Yes, the Malaysian Prime Minister already said he will be raising the issue of tariffs. The Malaysian Trade Minister has said that if a deal is not fair to Malaysia, they shouldn't be signing it. Now, some analysts believe that the tariffs for Southeast Asia eventually is going to be quite similar, because if the end goal of the US is to reduce the trade deficit, then having different levels of tariffs will eventually just shift the deficit to different countries depending on the level. So right now we have as high as 40% tariffs on Laos and Myanmar, as low as 20% for countries like Vietnam and the Philippines. So this is a real test of ASEAN and their ability to stay united and make their collective voices heard to get those tariffs lowered. But before the Marco Rubio meeting, which is taking place this afternoon, in the next 1.5 hours or so, Foreign Minister Wang Yi, the Chinese foreign minister, will be coming here to meet with the ASEAN foreign ministers as well. And again, we know that both China and the US are vying for influence in this region. China has warned Southeast Asian countries not to cut deals with the US that could undermine Chinese interests. And the big question, will Marco Rubio be sitting down to meet with Wang Yi? Remember, the two men had a chance to do so at the sidelines of the UN Security Council meeting in February in New York, but they didn't use that opportunity. Will they be using this opportunity this time? Because it's Marco Rubio's first trip to Southeast Asia in his capacity as Secretary of State. Will they be discussing a potential Trump trip to China? So a lot of questions here. We'll be hoping to catch Wang Yi later to ask him whether that meeting is happening. But for now, the Chinese Foreign Ministry had said that they have no information to offer.
Bloomberg's Min Min Lo there in Kuala Lumpur with the latest. A lot of questions when it comes to trade and Trump tariffs as these developments continue to roll in. Let's bring now Deborah Elms, who's the head of trade policy at the Hinrich Foundation. Deborah, we've been talking about this since, multilateral trade deals, traditional trade deals were actually still a thing, right? Can you break down the sort of and make sense of Trump's trade policy, particularly as now we've had this threat of 50% tariffs on Brazil, on Brazil, the response from Brazil. This is traditionally quite a strong relationship that the US has had, not to mention an economy that runs a trade deficit with the United States.
Yeah, I think that the big answer at the moment is that while the April 2nd tariffs were problematic because they used a really misguided formula, at least there was a formula. This latest batch of letters that Trump is sending out really make no sense at all. Some countries have gone down, some countries have gone up. There's absolutely no justification for either up or down, or even, frankly, staying the same. And so the result of that is complete confusion over what are U.S. goals and what are U.S. objectives. With the exception of the Brazil letter, every other letter has been identical. And so, again, for trade partners, what are you supposed to do with that? You've suddenly been given a new number, and it's not based on anything you either have or haven't done. It's not whether you've been there, you haven't been there, you tried hard, you didn't. It's completely random at this point.
And maybe it is the strategy of throwing everything at the wall and seeing what sticks, right? Everything's on the table under this new approach. But I do wonder, does that mean if you're a trading partner, you might also be thinking, well, what's the point in negotiating? Because he says one thing, he might mean another. Something could change in the next hour or day or weeks anyway.
Yeah, I think that's been the question from the beginning with this second version of the Trump administration. What is it that they're looking for? And even if you gave that to Trump, would he be satisfied with that? And would he be satisfied with whatever you gave him for more than 5 minutes? And I think the longer this goes on, the more likely it is that trade partners will say, well, we tried. We did take this seriously. We spent a huge amount of time, effort, money, resources, and we ended up with almost exactly what we got at the outset. And so we are going to dial back our participation in these discussions, and we'll just sort of see what happens. But I think it is problematic because these numbers that the Trump administration is throwing out are huge. We would have said at the beginning of this that 10% was outrageous. Remember that U.S. tariffs in December were just over 2%. So 10% would have been a massive increase in tariffs. And now we're looking at numbers easily between 20 and 40, and Brazil just got handed 50. So these are numbers that in any other world we would be completely flabbergasted to be discussing at all, and now we seem to be sort of discounting them as just the price of doing business.
So let's talk a little bit about Brazil, because as Heidi mentioned, this is a country that runs a trade deficit with the United States. They've had a traditionally very strong partnership with the United States. And at the same time now, President Trump singling out Brazil for 50% tariffs could almost look politically motivated, given that he's also talking about former President Jair Bolsonaro. Isn't this interference using economic tools to politically interfere in other countries' domestic politics, and doing it so overtly? What's the message that it sends to other countries?
Well, I think it's deeply problematic. Remember that the official justification for these tariffs is an Emergency Economic Powers Act, which says that there is an economic emergency that needs to be resolved, and Trump is arguing that tariffs are the solution to this set of economic emergencies. And it is hard to figure out what kind of economic emergency is plaguing the U.S.-Brazil relationship such that you need a 50% tariff. I think we already have this particular justification under dispute in the court system in the U.S. 2 courts have found against it. It's now in an appeals process. We'll see what happens. But I think most alarmingly, if I was Brazil, the letter also indicated that they are going to start a different kind of trade process with Brazil called a Section 301 of unfair trade practices. And if that happens and goes forward, then no matter what takes place in these court cases under IEEPA, there is still justification for treating Brazilian trade very differently in the future. And that can be extraordinarily long-lasting and damaging.
And then, as a country leader that's negotiating with the United States, do you see this as a 4-year blip? Can you just get over it, weather through the crises right now, and try to get to the other side? Or is this going to be a more long-term issue if President Trump is representative of what the Republican Party has now become?
I think that is, of course, a giant question that every leader is asking themselves. How long is this going to be? And clearly, a lot of the commentary is suggesting that the goal is to just play for time, to do whatever it takes, play for time, you know, a week's extension, a month's extension, 6 weeks extension. As long as you keep kicking this can down the road, it'll be fine. But I think that's also problematic because, remember, these tariffs are enormous. 20 to 40% across the board for many trade partners is really extremely problematic. And so you can say we're just going to pretend, or we're going to play, or we're going to extend. But if that doesn't happen, then all of a sudden you're facing very high tariffs that have real economic consequences for your domestic economy. Those are people's jobs. Those are livelihoods. That's businesses that may have to close as a result of these incredibly high tariffs implemented extraordinarily quickly. And so I think that the challenge, as always, for leaders is, well, what if anything, could I do? And if I could do that, would I do so? And if I did it and I got an agreement, how long would it last? And so I think these are all questions that are still in the minds of every trade partner and will be for some time to come.
Especially perhaps India, could they be next in the firing line? We thought that India was safe, that then the agreement would come after the UK, Vietnam, and the Geneva framework with China. But now if you lump India together with the rest of BRICS and then you threaten an additional 10%, anything that has been negotiated until now, does it even make sense? What's the point?
Well, I think it's a great question, and if you want a poster child for this, I would say look at South Korea, which has a free trade agreement with the United States that was painfully renegotiated under Trump's first administration, and in spite of that, and in spite of a lot of effort on the part of their government since April 2nd, they actually got hit again with a 25% tariff yesterday in one of these letters. So I think it does make you question the value of any agreement or commitment. However, the alternative is, well, what if we actually succeed? What if we get the outcome we're looking for and we're then somehow safe for at least a longer period of time and maybe for the duration of Trump's term? That's a gamble that every government has to decide whether they're prepared to accept or not.
Deborah Elms, always good to have you with us, head of trade policy at the Hinrich Foundation, of course, talking about all of these tariff implications with the threats coming from President Trump, which have real implications on the economies of these countries, on the markets as well. Take a look at how FX traded, especially when it comes to the Brazilian real, which tumbled after this 50% tariff threat coming from President Trump. This was the worst performer among EMs. And remember, just overnight as well, we had the Chilean peso continuing to fall because President President Trump threatened copper tariffs of also 50%. Now, the dollar has remained sort of steady on the other side of that trade, but of course, given the uncertainty around trade policy coming from the United States, there has been this weakness, ongoing declining trend when it comes to U.S. assets. Singapore State Investment Fund Temasek now saying that one of the biggest surprises in the market this year has been that dollar decline. CIO Rohit Sipahimalani told us how that's forcing a recalibration of their hedging strategies, as well as the impact of tariffs on global growth.
We need certainty around the tariffs. The main impact is really through business confidence, right? And when it's uncertain, it's difficult for you to make an investment commitment. It's difficult for you to hire people, which is why we've seen a bit of a slowdown in the economy, and we expect that in Q3. Having said that, because governments have responded around the world with reasonably aggressive fiscal policies, central banks in most parts of the world are easing or have plans to ease. So actually that impact has been mitigated, which is why the risk of a recession today is, I would say, quite low. And once you have tariff certainty, and then through the year, as central banks are cutting rates, as you see more deregulation in the US, et cetera, we would expect a pickup of growth going into 2026.
Were you surprised in how the ultimate impact from Trump policies played out in the slide of the dollar?
Well, I do think that the way the dollar has behaved this year has been surprising. During risk-off periods, normally the dollar tends to appreciate, and you haven't seen that this year. And it is frankly something that all investors now need to factor in, that you can't just assume a one-way move of the dollar upwards, and now we've seen the reverse out there. So historically, most asset owners would not hedge most of their US dollar exposure, because as I said, during risk-off periods, the dollar would appreciate, so it was a natural diversifier. That's no longer the case. So we, and I think all investors, have now got to factor in the cost of US dollar depreciation on our returns. Like for us, we measure it in Sing dollars. We can, of course, hedge it, but even hedging has a cost. And so we have to factor that in all our investments.
So you don't necessarily expect a reverse higher in the greenback later this year?
Look, I don't think it's very difficult to predict currency movements as such. I think what's sort of clear is that there are forces on both sides. In the very near term, the key forces that are leading to the depreciation of the US dollar is everyone trying to hedge at least part of the exposure, because people had almost no hedges on the US dollar exposure. And that is putting a natural pressure. At some point, that will abate. Beyond that, it'll be a question about capital flows out of the US, trade flows, capital flows, which we will have to see how they plan out. But near term, I do expect pressure, purely because more people are looking to hedge their exposure, and that naturally puts pressure on the US dollar.
Temasek CIO Rohit Sipahimalani there, speaking with our colleague April Hong. Much more ahead on the Asia trade. This is Bloomberg. Warburg Pincus CEO Jeffrey Perlman thinks Southeast Asian countries will likely get similar tariff rates because a big difference won't meaningfully cut the overall trade deficit. Speaking exclusively to Bloomberg, he also touched upon investing opportunities in India and Japan.
I think Vietnam got out in front of obviously a very complicated environment, and I think being proactive, I think, was a positive. I think landing, we'll see where it lands for everyone else, but I think getting to that 20% threshold makes it very competitive for Vietnam going forward. I think most countries probably, I mean, we saw the most recent announcement, my sense is some of those end up coming down as they get negotiated. So I think 20% ends up very competitive. We know the bottom line is going to be at least something more than 10%. So as long as you're kind of sitting in that 15 to 20%, I think it's very competitive. And so I think Vietnam, as we sit today, and obviously things can change, but it feels well positioned given the overall environment.
There are countries like Thailand, for instance, which may just see lower tariffs in Vietnam. Would Vietnam lose its competitiveness as a result of that, or are there factors that make Vietnam really attractive to investors like yourself?
You know, it's a great question. I think because a lot of the products that are made in Southeast Asia and in Vietnam as well are, I think the U.S. administration has been fairly clear that they're probably ones that are not going to be made in the U.S. And so my own view is I think the tariff rates will probably be pretty close, sitting on top of each other across a number of those markets. And the reason being is if you have one country that's at 40%, others are at 20%, it's just going to shift the trade deficit from one country to another. And so I think the U.S. administration understands that. And so my sense is, again, it's going to end up, I think, for ASEAN countries, is my sense, they're going to be pretty, close together on that front. But I think what Vietnam has created is a tremendous ecosystem of the Queen Bees and other of the key manufacturing kind of power centers. And that's very valuable. You saw them produce through COVID. That really established, I think, their reputation even more as a high-quality producer. And I think that positions them well, even if other markets ended up at 15% and they're 20%. I still think that's very competitive going forward. As we think about Asia, what I like about Asia is obviously in a world of higher rates, you need growth. Asia is going to represent 2/3 of global growth over the next decade. So I think from that perspective, it's very well positioned. We've been in the region for 30 years. We just celebrated our 30th anniversary last year. In fact, next year will be our 30th anniversary in India. So we've been in these markets a long time. And I think when you think about especially playing the emerging consumer, whether, again, it's in housing and retail, areas like private education, healthcare, and especially financial services. Financial services, if you looked at the last 30 years that we've been in India, there has not been a single moment in time in those 30 years that we weren't invested in financial services. From sponsoring the two largest private sector banks, HDFC and Kotak, through our most recent investment back into IDFC First, which we made after Liberation Day. Financial services is really poised for, we think, a lot of growth going forward.
You talked about India. How about other markets like Japan, which seems to be quite attractive to a lot of investors?
Yeah, look, Japan is certainly, when I think about investors and their diversification, certainly the U.S. has been a huge market for them. Sprinkle a little bit of India, and certainly now increasingly they want more exposure to Japan. Look, we've seen major structural reforms, obviously in terms of pushing more efficiency within corporates across Japan. We think that is transformational. From a private equity perspective, it's going to set up more opportunities for groups like ourselves. We've been active in Japan over the years in real estate, whether it's logistics, data centers, life sciences and R&D assets. But from a private equity perspective, I think where we're uniquely positioned as growth investors is there are some great brands in Japan that need help to grow outside of Japan. And so that's one of the great elements of, I think, for Warburg Pincus being a global partnership, is we can help to take those companies overseas and really leverage our footprint around the world.
Warburg Pincus CEO Jeffrey Perlman there speaking to Haslinda Amin at the TechCom Bank Investment Summit in Hanoi. More ahead on the Asia trade, this is Bloomberg.
Breaking out of Japan, producer price numbers for the month of June rising 2.9%, a deceleration for a third consecutive month and decelerating from over 3% growth in the previous month. When it comes to the month-on-month numbers, a contraction also 0.2% for the month of June, a slightly larger contraction than what was expected and sort of at the same level as the previous month. We have now seen, of course, a little bit of deceleration when it comes to the inflation figures, but the CPI, the consumer price inflation, has remained above that 2% level now for over 2 years. Of course, big implications for the Bank of Japan. Haidi.
Well, Samsung, Shery, has launched 3 new foldable smartphones, which are thinner and lighter than previous versions. It is a bid to tighten the company's grip on the category and broaden mainstream appeal before Apple debuts its own foldable next year. Bloomberg Consumer Tech Managing Editor Mark Gurman joins us now from Los Angeles. And Mark, I'm keen to get your thoughts on the foldables segment, in particular these offerings, and what we could potentially see from Apple when they finally come online as well.
I'm a huge fan of foldables. I love the form factor. I love the ability to move between something that feels like a standard candy bar style smartphone into something that feels like a small tablet. Something, in some cases, maybe you're using for texting, and then you want to watch a video or play a game or work on a document. You open that thing up and you have the full display, right? That bigger perspective, that larger user interface, that bigger canvas. So to me, it's extremely compelling. What Samsung has done here is they've actually widened that front screen so you have more screen real estate outside. They've upgraded the photography capabilities. They've reduced the crease on the display, and they've made the phone extremely thin. It is significantly thinner. It's about the same thickness as a normal non-foldable phone at this point. So they've done a great job on that handset, and I think it's going to be quite popular. They really need to make this go mainstream ahead of Apple's big launch next year. So they basically have a mainstream version now, and they have a year head start.
How much artificial intelligence has been integrated, not only in these smartphones, but also in other products like watches?
So the new watches are the first to run Google's new Wear OS 6, which embeds Gemini AI chatbot pretty significantly. There are some new features on the AI front on the foldable as well. But people are not buying phones because of AI. People are buying phones because their screen breaks, they want a better camera, they want a thinner form factor, they want a better overall experience. AI is really not in the top 3 or 4 bullets for why a person buys a phone at this point anyway, so that's not really a factor here. This is about that new folding screen technology, the thinner design, the better cameras. The other thing they've done is they've now rolled out a new version of their Flip. That's the phone that folds vertically, like an old school flip phone, something like a Razr or a Nokia from back in the day. They now have a $900 version, so that is a significant price reduction for a bit of a scaled down model.
And I do wonder, when Apple finally brings its product to market, how much buzz is there going to be? And is it going to be essentially a foldable version of an iPhone? And I'd imagine that price point might reflect that too.
Yeah, here's the power of Apple. There's going to be a lot of people who discover a foldable phone for the first time next year because Apple has done it. And what that's going to do is raise awareness for everyone else. And so you're going probably to see Samsung foldable sales skyrocket thanks to the Apple foldable next year. And yes, it's going to be a foldable iPhone. Externally, it's going to be about the size of a standard iPhone, but when you open it up, it's going to have a nearly 8-inch screen, something closer to the size of an iPad mini. So I'm personally pretty pumped for it.
Yeah, looking forward to that iPhone foldable. Mark Gurman, good to have you with us. Bloomberg managing editor covering Apple and consumer tech. Of course, we'll be watching also the sovereign debt space. We do have a 20-year JGB auction to watch out for. Remember, the last 20-year auction back in May sent 30 and 40-year yields to a record high across Japan. And of course, with fiscal concerns around the world, we've been watching a lot of volatility in the sovereign debt space. The market opens in Sydney, Seoul, and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. And of course, we're bracing for that reaction in the markets as well, Heidi, as we have now seen President Trump's demand letters when it comes to those tariffs on several countries, including on the Philippines, 20%, and Brazil, potentially 50%.
And that uncertainty is such a downside for global economies, right? Makes it really difficult for central banks, for policymakers. And there is just so much uncertainty out there. And it leaves a lot of other countries, including Australia, wondering what comes next in terms of the countries that he hasn't yet mentioned or targeted.
Yeah, and of course, you said it's central banks. A key question, we have already had the RBA, the RBNZ hold rates steady. Today, we do have the Bank of Korea's rate decision as well. But as we head towards the Japanese market opens, what we'll be watching is a sovereign debt space because we have a crucial 20-year JGB auction. And remember, back in May, when we had that auction and we saw soft demand, we saw 30 and 40-year yields surging to record highs. Already, we are seeing a lot of concerns around the fiscal spending side of things, not only in Japan, but also in the U.S., also in Germany. So that has implications really for global markets. The finance minister here in Japan just last month talking about really reducing the issuance of long-term debt because of really trying to boost that demand. And that includes 20-year JGB auctions for today. So we'll be watching that space very closely. But in the meantime, we have a little bit of strength for the Japanese yen, 146 after topping 147 in the overnight session. The Nikkei under a little bit of pressure, down 0.2%. Take a look at how the cost base coming online because Morningstar are now saying that Korea could be the EM's best bet over the next decade because of the technology stocks in this market tied to artificial intelligence, not to mention that the government is really trying to boost corporate reform. You can see that Kospi now gaining 0.3% all week. It's been really supported. The Korean won seeing also a little bit of strength. All of this, of course, ahead of that rate decision by the Bank of Korea. Haidi, another hold expected along with other central banks across Asia. Right now in South Korea, the issue of financial stability, especially with surging housing prices in Seoul, is what we're watching.
Always those domestic factors at play there, Shery. But take a look at how we're sort of settling in when it comes to the Thursday session. As we open up in Australia, the ASX up about 0.5%. We've had a couple of pretty difficult sessions, particularly after that really shock decision from the RBA to hold when expectations were for back-to-back cuts this week. The RBNZ did no such thing when it comes to shocking markets. But at the moment, we're seeing perhaps a little bit of a recovery after we saw Aussie stocks falling the most in about 2 months in that Wednesday session. A lot of that was being dragged down by pharma stocks in particular. So we'll be watching that sector very closely with that threat of around 200% potentially tariffs on pharmaceutical imports into the US was last flagged by President Trump. So watching that sector very closely as well. The Aussie dollar is largely unmoved at the moment. 63.35 is where we're at. The dollar kind of pretty steady. So those dollar Asia pairs are not seeing much of a move. We're also watching oil as well. Some of the energy names as well. WTI is holding pretty steady at the moment. Brent crude, I should say, off by about 0.3%. Pretty large increase in US stockpiles. That's at play here. But of course, it is all down to trade and the extra uncertainty that we see being injected with each of these countries being targeted by President Trump's policies. That's bringing Carol Schleif, who's the chief market strategist at BMO Private Wealth. And we kind of keep throwing out the idea that the only certainty is just yet more uncertainty with this administration's policies, right? With the latest developments when it comes to pretty major and traditionally strong trading relationships with countries like Brazil. What do you make of this? And is this market sort of looking a little bit too calm for all of the volatility?
Well, I think the interesting thing is the market is really trying to find the through line in the most important thing for the intermediate and longer term. There's always some level of uncertainty, and granted, this year there's been an acute level in a lot of different fronts. But not knowing how to game out, if you will, the tariffs, where they end up, what the level ends up being, if they actually end up being there. Because keep in mind, the countrywide tariffs, the so-called reciprocal tariffs, are still under legal challenge. And so you've got those issues. So what investors are really doing is looking through and looking at the economic fundamentals. And fundamentals have been pretty solid, especially they're improving in a lot of places around the globe. The U.S., we've had economic activity come through. Consumers are employed. They might be a little grumpy, but they're still in aggregate spending. So those economics continue to come through. And with earnings season kicking off next week in the U.S. in particular, we brought the bar down pretty dramatically through the first quarter. And so the aggregate expectations are low single digits. And that's a pretty low bar for companies to be able to best, especially given the fact that we backed off of a lot of those rates that were announced in early April.
You talked about the need for diversification outside of US assets at the moment. What's compelling to you when it comes to international?
I think it's important. I mean, we were a bit underweight developed markets, particularly in the EU, as many around the globe were going into the beginning of the year. It's an area we're looking hard at now, especially trying to see if there's follow through on have we really turned the corner and teed up a secular pivot going on there, especially with the debt brake being removed, the EU and NATO countries agreeing to spend more on defense, on infrastructure, on grid enhancement. If we see follow through on those, we definitely don't want to be underweight longer term there. But as far as Southeast Asia goes, it's interesting. It's very controversial, especially with U.S.-based clients. But China, to me, is an interesting play in here for a lot of things that go on, not the least of which is the technological superiority, the ability to have staying power in a trade war, as we've seen.
Spending more has been the name of the game, not only in Europe, but of course in the U.S. and potentially here in Japan as well. As we head towards the upper house elections, we're watching the 20-year JGB auction. We'll get the Treasury's 30-year auction. We're coming off a 10-year auction as well. How much more volatility can we expect in sovereign debt markets this year?
Yeah, I think that's a great point, and your lead-up touched on pieces of this. The equity markets, and ironically, equity markets don't mind deficit spending because it means there's more spending to juice growth, and that's what the equity markets are all about. Fixed income markets, on the other hand, really do provide a governor, if you will, on holding politicians accountable. We've seen it repeatedly in the UK in terms of those bond markets keeping the politicians accountable for you can't cut taxes and expect to grow your way out of deficits. We've seen those wobbles in the U.S. You're seeing them in Japan. And so the interesting thing is we are watching very carefully the intermediate and longer term debt, particularly even Secretary of the Treasury, Scott Bessent, has gotten President Trump to really focus on the yield of around the levels that this 10-year is at, and which, as you know, moves very differently from the monetary policy that our central banks are moving at the short end, because there's a lot at play there. And so I think the bond markets will continue to be that feedback mechanism to the politicians, if you will. While they might do a lot of infighting, sooner or later they're going to have to listen to the fixed income markets.
At least you said it, when it comes to the equity markets, they like the fiscal spending side of things, right? Supporting the economy, of course, supporting that risk appetite. We've seen a lot of optimism about the structural boost here in Japan. Could South Korea be the next one? And mind you, we do get a Bank of Korea rate decision today as well that we're watching out for.
Right. I definitely think so. And the point that you made, I'd love to underscore that in terms of the composition of the indexes, because a lot of Southeast Asian indexes, the indexes in Japan, the indexes in South Korea, some of the Hong Kong indexes are much more technology weighted, similar to what the U.S. is, as opposed to Germany's, which is manufacturing heavy, a Canadian index, the TSX, which is very natural resources heavy. So understanding the indexes, even if you're trying to go passive, understanding that composition. But South Korea sounds like it's teeing up and it's well positioned in a lot of different fronts to be the beneficiary of some of those shifting supply chains and security and manufacturing arrangements.
Carol Schleif, always good to have you with us, Chief Market Strategist at BMO Private Wealth. And just as Carol mentioned, of course, it's very important for us to keep in mind the index weightings when it comes to some of those stocks. Nvidia, of course, taking up about 7.5% of the S&P 500 index and now achieving that $4 trillion market cap. This is Bloomberg.
We're really focused one-on-one with the top 18 economies with which we do a lot of trade. So those negotiations are still, for the most part, robust and ongoing.
U.S. Deputy Treasury Secretary Michael Faulkner there speaking to us about those tariff negotiations. Now, President Trump also earlier unveiling, of course, that new round of tariff demand letters, including a 50% rate on Brazil, one of the highest so far announced. An ETF linked to Brazil's benchmark stock index is traded in Tokyo. We're seeing declines this morning of more than 5%. Bloomberg's digital politics editor Romy Verghese joins us now for more of this. And Romy, of course, Brazil is the odd one out, right? Because it's one of the top 20 trading partners of the United States. The rest of these trading partners not so big in terms of trading relationships with Washington. Tell us a little bit about the significance of these tariffs.
This is pretty significant given how big Brazil is as a trading partner, and also the fact that it actually takes in more U.S. goods. The U.S. does not have a trade deficit with Brazil. Of the other nations announced today, the Philippines is a major trading partner. It's in the top 50 of major trading partners for the U.S., but the others are fairly small. The other 6 nations only account for about 15 $18 billion in imports to the United States combined. So Brazil is an outlier, and it's largely because of politics. Trump did not. Trump directly tied it to Bolsonaro, saying he was making this change because of Brazil, what he calls Brazil's attacks on free elections. Now, this raises a lot of issues, especially because for the other countries, Trump talked about being fair when it came to trade, but here with Brazil, it's clearly tied to politics.
And that's sort of the most interesting thing, right? Tied to politics for a country that actually runs a trade deficit with the US. We've seen that market reaction from Brazil. Are we starting to see a shift in terms of the broader market reaction to just a level of trade uncertainty that we keep seeing out of the White House?
Obviously, there has been an outside reaction for markets, for investments that are tied directly to Brazil. But taking a step back, markets actually have been more reacting to the fact that Trump extended the deadline to August 1st. Here in the United States, the S&P 500, it almost hit a record high. So the fact that Trump extended the deadline has led to a lot of skepticism among traders. Would he extend again? Will he continue to negotiate past August 1st? And I think that is where, traders have been focused on, apart from, obviously very specific Brazil investments, which you have, of course, seen a major impact today.
Yeah, the taco trade, right? I mean, the President Trump tends to back down when these deadlines actually come. But when it comes to August 1st, so is it likely that we could see, I guess this is a difficult question given that his tune changes from day to night, so.
Well, that's the issue with Trump. You can't ever say anything is for certain. And of course, Trump likes to stoke uncertainty himself. I mean, earlier this week, he said he wasn't 100% firm on the August 1st deadline. The next day, he said there will be no extensions. And then we've had an official saying today that the tariffs could go into effect on August 1st, but there would still be negotiations. So if you're looking for certainty, you will not get it before August 1st, and you probably won't get it on August 1st.
Bloomberg's digital politics editor, Remy Varghese there. Well, Malaysia's Prime Minister Anwar Ibrahim will make an appeal for lower tariffs when he meets with the US Secretary of State Marco Rubio today at the ASEAN meeting. Bloomberg's Min Min Loy joins us now from Kuala Lumpur. So we are also seeing Wang Yi and Marco Rubio meeting with ASEAN ministers today. What are we expecting, given that we know that trade tensions, tariff threats are going to be top of mind?
Yes, this place is starting to fill up because we are about 45 minutes away from Wang Yi's meeting with the ASEAN foreign ministers, and the Chinese foreign minister likely to again reiterate calls for free trade and multilateralism and opposing hegemony. Of course, the South China Sea territorial conflict also on the agenda. Southeast Asia has been trying to come up with this code of conduct with China, but that has seen very slow progress. But as you said, today it's going to be those tariffs that will be overshadowing the talks. The ASEAN ministers will likely to want to get some clarity about what sort of actions China might want to take against countries that cut deals like the one that Vietnam has agreed to, where there is higher tariffs for transshipped goods. And of course, Marco Rubio meeting with ASEAN ministers later this afternoon as well. And already the Malaysian Prime Minister Anwar Ibrahim has said he will be discussing the lowering of tariffs with Marco Rubio. Currently, we are seeing tariffs as high as 40% and as low as 20% for countries like the Philippines, and analysts say eventually it is possible all those tariffs might converge perhaps towards the lower threshold of 20%, because if the end goal of the US is to reduce trade deficit, then having different levels of tariffs defeats that purpose if it simply shifts that trade deficit to different countries. So this is a real test of ASEAN's relevance, whether they will be able to come together as a united bloc to increase their leverage over the US to make their voices heard.
Mimi, what about a Marco Rubio Wang Yi meeting on the sidelines?
Yes, this is the perfect opportunity because both men are in the same place at the same time. The two men had a chance to sit down at the sidelines of the UN Security Council meeting in February in New York, but they didn't take that opportunity. Will they take that opportunity this time? Because that would tell us, give us a sense of where the state of US-China relations is and whether the two men will discuss perhaps laying the groundwork for a potential President Trump visit to China at some point later this year. So that's something we want to find out when Wang Yi passes through. We'll see if we can ask that question to him. But remember, Marco Rubio is twice sanctioned by China for his comments on Xinjiang and Hong Kong. China, of course, has said that is not going to affect official exchanges. But again, the Chinese Foreign Ministry has said they have no information to offer as of now whether or not that meeting will take place today.
Bloomberg's moving though there with the latest on those ASEAN meetings taking place today. Other stories that we're following: OPEC has barred 5 leading news organizations, including Bloomberg News, from covering its biannual oil seminar in Vienna. The New York Times, Reuters, the Financial Times, and the Wall Street Journal are also excluded. OPEC offered no explanation for its decision, but the bloc's de facto leader, Saudi Arabia, has publicly criticized journalists for their reporting on the cartel. A South Korean court has approved the new arrest of former President Yoon Suk-yeol on charges tied to his declaration last year of martial law. The court accepted a special prosecutor's claim that Yoon poses a risk of destroying evidence. Yoon appeared in court Wednesday for a hearing reviewing the request. He was then taken to a detention center to await the ruling. Taiwan is holding its biggest annual military drills ever as President Lai Ching-te emphasizes readiness against a potential Chinese attack. The 10-day exercises are double the usual length and will call up a record 20,000 reservists. Even civilians are getting involved, with local governments testing essential services and the supermarket chain using basements for air raid shelters.
Let's take a look at how futures in Europe, Shery, are opening up at the moment as we continue to see, of course, the uncertainty and volatility when it comes to Trump's trade missives play out. We are actually seeing a little bit of upside there. Euro Stoxx 50 futures up by about 0.25% there. We are seeing also German DAX futures seeing a little bit of upside too. There had been the hopes of that sort of reprieve or a deal coming close when it comes to the European side of some of these, potential trade deals. But we haven't seen a great deal of certainty there. We have seen that rally being driven by some of the financials, banks leading the gains on the back of a rally in unit credit that we saw in the previous session. Really, we're hearing sort of analysts say investors are pretty optimistic about that trade deal coming through in Europe. We're seeing some front running when it comes to those gains. Front running when it comes to those gains in the euro there as well, as we set up for potentially a 4th day of that rally for European stocks. More ahead on the Asia trade. This is Bloomberg. The annual Allen & Co. retreat in Sun Valley is underway, with global tech and media moguls gathering to talk deals, investments, and the battle for AI talent. Our Bloomberg Tech co-anchor Ed Ludlow joins us now from the event in Idaho. So, summer camp for billionaires. What did we see in the first day?
Yeah, I think, what people are talking about is this AI talent war, in large part because the participants here, Sam Altman, the OpenAI CEO, is here, Satya Nadella is here, Tim Cook is here, and obviously there has been in the headlines recently the accusation by Sam Altman about Meta's attempts to take engineers from OpenAI with big sums. One of the people I spoke to was Reid Hoffman, who was formerly on OpenAI's board, and what he said is, this is just the marketplace right now. Listen to this.
We know that AI is going to transform all businesses and all industry and the entire tech industry. And these are trillion-dollar companies, et cetera, at the high end, and a whole stack all the way through down into billion. So saying, hey, this piece of talent is a risk-adjusted bet that makes a difference in that's just a risk bet.
So that's just the world we're in technology right now. No matter how awkward it is, you saw Tim Cook on the screen, obviously reports recently from Bloomberg about Meta also taking very senior model leadership from Apple. But one thing I'd point out really quick, no one's actually seen Zuckerberg yet, and no one I've spoken to at least, so we don't know if he's here.
And also big news on the tech world when it comes to X. We're now hearing that the CEO, only 2 years in her job, Linda Yaccarino, is stepping down.
Yeah, I mean, on the one hand, it's a surprise given the timing. On the other hand, it's not been an easy 2 years. You know, we've reported a lot on the advertiser flight, and I know that Linda personally worked really hard to bring a lot of the advertisers back, and those advertisers still had some issue with Elon Musk's personal use of and communication through X. Highly regarded by Wall Street, Linda Yaccarino, longtime NBC executive, like she was doing an interesting job. What I would point to in that very long post, which was showing the first part of, was her reference to XAI, and remind the audience that in March, Elon essentially merged X with XAI under the XAI Holdings umbrella. And it seems like right now XAI is the priority. Many believe that it is a moat, a sort of competitive moat, to have a social media platform like X linked to it, which is constantly generating contemporaneous and human-generated data. But yeah, we just don't know the answer, and I know that Elon Musk replied to a senior European official who had joked that there's plenty of talent in Europe if he's looking for a replacement, but that's all we've heard from Elon, other than him thanking her for her time at X.
And while X sort of, continues to confront its own set of problems, particularly in Europe, and what we've seen from from Grok as well, right? But what else are sort of going to be top of mind when it comes to the conversations that you'll be watching out for at Sun Valley?
Yeah, I mean, Sun Valley people also just kind of think big picture, like when they're talking to each other in between sessions, sources are telling us that they're thinking a lot about geopolitics. They're also thinking about this, is AI going to take my job discussion, which we have all the time on Bloomberg Television with those people that we interview. It is historically a TMT, a media-focused M&A conference, right? Allen & Co. is a boutique bank. They advise on lots of deals. That puts Bob Iger in focus as the CEO of Disney. We had reported that Disney and Hearst, who have this JV called A&E, it's cable channels like History, that they might be willing to sell that. We haven't really heard anything. So that kind of side of it happens. And, Bob Iger on your screen right now, there's always a question around Disney and succession. And again, Bob didn't really want to talk about that. So what you'll find is in the weeks and months ahead, deals tend to happen. Maybe that they were conceived or the idea came up in Sun Valley for the first time. It's very hard to confirm that, but people talk, and there's a high concentration of people in that ecosystem all in one place for just 5 days.
And that Bloomberg technology anchor, of course, following all of those conversations in Sun Valley. And now one of the stocks that we've been watching throughout has been, of course, Nvidia. And on the other side here across Asia, those suppliers for the company. Nvidia just became the first company in history to achieve a $4 trillion market valuation. We're talking about a 20% surge this year already, which would make it around a 7.5% weighting for the S&P 500. So take 1,000% gain or more since 2023, and you have a huge gain when it comes to the U.S. stock market. We are expecting Jensen Huang, the CEO of Nvidia, according to the Financial Times, that he'll be at an expo in Beijing next week to speak to top Chinese leaders. We have more ahead. This is Bloomberg.
Take a look at what we're watching when it comes to trading across Asia, as we see that unease continue to play out when it comes to the unveiling of new tariff rates, including that 50% levy on Brazil. We're now hearing more commentary from President Trump at the moment, announcing that 50% tariff on copper taking effect on August 1st. So this, according to a latest posting, saying that he's received robust national security assessment that 50% on copper will be effective on August 1st. US, we've already had that reaction when it comes to copper prices, as well as some of the metals and mining stocks as well. He says this 50% tariff will reverse the Biden administration's policy and behavior, and America will once again build a dominant copper industry. So this comes on the back of that 50% levy being unveiled on Brazil, other partners as well being subject to rates including 30% on Algeria. We've also seen Sri Lanka, 20% on goods from the Philippines as well. So take a look at what we're watching when it comes to copper prices. We are seeing upside of about just 0.4% there. Of course, also sort of balancing out what we've seen in terms of a slump in demand from key markets like China as the economic slowdown continues to play. But we've also seen sort of some of the impact as we see that front-loading. Copper traders are looking to shift those deliveries into places like Hawaii, Puerto Rico, to cut out those shipment times with the expectation of these new levies. We're hearing that confirmation from Donald Trump that they will take effect on August 1st, Shery.
Yeah, we had seen that gap when it comes to U.S. pricing, given, of course, as you mentioned, that front-loading as well. But take a look at how we're trading when it comes to the chip sector as well. A little bit of a mixed picture, but, of course, we're digesting several things, including Nvidia becoming the first company in history to achieve a $4 trillion market valuation. So we'll be following those suppliers on the other side of that trade. We also had Samsung introducing 3 new foldable smartphones, and a lot of their devices now incorporating more artificial intelligence capabilities. Also today, TSMC set to release its June 2025 sales figures. The report is expected to follow robust performance back in May, given the sustained demand for AI chips. Let's actually discuss more about these chips and bring in Bloomberg Intelligence senior technology analyst Masahiro Wakasugi, especially when it comes to Nvidia, of course, because we're talking about a huge rebound, especially from earlier this year when we saw that sell-off because of DeepSeek.
Yes, and actually market is talking about the recent smooth transition from the previous generation of GPU to the new generation. It's people call it GB300 or Blackwell Ultra. And last year we had some kind of slight, delay of the shipment of the new GPU from Nvidia. That was created some kind of concerns about the smooth ramp up for the new generation of GB300. But we are hearing that one of the customers for Nvidia saying, CoreWeave saying that they have already deployed, the most advanced GB300 based AI services. So maybe people might be a little bit relieved to hear that the transition from the previous generation and to the next generation is very smoothly making a progress at this point.
When it comes to the recent smooth shipments from Nvidia of the new GPUs, how does it affect the whole supply chain?
Yes, and if we look at the whole supply chain, as you may know, that the chips are made by TSMC, and the company will be reporting the earnings probably next week, and the comment from TSMC may be encouraging, and also the next week ASML, it's a chip making company, and supplying their tools to TSMC. So, and the whole supply chain may be a little bit encouraged by the news from the Nvidia, and of course SK Hynix are supplying its high-end HBM chips to new GPUs made by Nvidia. So the TSMC or maybe ASM or maybe HBM related products should be quite making a good progress, and this is a very good news from the for the whole supply chain, I think.
Are we seeing any sort of implication from all of these different tariff threats and export restrictions coming from Washington?
At this point, as long as we see the, especially chip making equipment, we are not seeing very, meaningful impact at this point. And actually, the development of the semiconductors are based on the very, long-term, basis. And still, we are having the semiconductor market reaching $1 trillion by 2030 or around that time frame. So I think that many companies, including Nvidia, Nvidia or maybe Intel, even Intel or Samsung, and also TSMC are investing in the next generation technology. So in that sense, a long-term chip development should be making a good progress at this point.
Bloomberg Intelligence senior tech analyst Masahiro Wakasugi there. Well, Singapore's state investment fund, Temasek, says exposure to China has fallen to less than 20% of its portfolio as it boosts allocations to the Americas and India. The CIO, Rohit Sipahimalani, told us that China's AI ambitions could be a game changer.
In terms of AI adoption, China is going to be pretty advanced on that, adopting AI for productivity or other things. That's because we have so many engineers and AI tech people out there that the diffusion into companies to adopt AI, I think, is going to be quite fast. So you take an example, a company like Tencent. We invested out there. It is clearly benefiting from AI in terms of how it uses it for its own business. So I do think you will see in China too, particularly on the adopters side, significant opportunities for us to invest.
How long-term a view would you have to take on that, though? Because it's interesting, we've seen these AI developments, yet they're not really driving tech earnings upgrades. That seems to be quite modest still.
So at the near term, it's obviously having an impact on productivity for those who who are equipped to use it. So the most obvious example of that is, let's say, the Magnificent Six, companies like Microsoft or Google or Amazon. And they're all talking about the fact that they need far few coders, for example. And actually, one of the ways that their earnings are being upgraded is because how they manage their costs as AI improves productivity. So we already are seeing it in one group of companies who are best equipped to use it. As that gets diffused across more and more companies who have the ability to use it, I think you will see that spread out. Now, it may take time, but I think on some companies, you're already seeing that today.
How are you managing the China real estate exposure as well?
So look, that has been a challenge over the last few years. I don't think we're out of the woods out there, but the pace of decline has, I would say, stabilized to some extent. The government's very conscious about stabilizing the real estate market, and they're taking efforts towards that. They clearly don't want a bubble to be recreated, so I don't think we can expect a sharp rebound. But it is something that our portfolio companies, because I think our China real estate exposure is primarily through our TPCs like Capital Land and Mapletree. And they're looking to see how to manage through this environment, including making investments elsewhere too.
Would you say that previously it was a bit more cautious in the past year, at least when you're looking at China investing, and that now there's a change, a more positive outlook for Temasek?
So I would say China's always been a very important market for us and one of our biggest markets. And we think as an $18 trillion economy, there will always be significant opportunities for us. So our focus out there, and compared to most other asset owners, our exposure there is very, very significant. What has happened in the last year? I would say a couple of things. Confidence has improved, particularly amongst entrepreneurs. DeepSeek was one moment which actually led everyone to believe that despite these trade tensions, China can compete with the best. There's also a belief amongst private companies that the government is supportive of them. And so you are seeing that improved confidence out there. The government's also made it clear that, yes, they're not going to create a bubble in the economy, so you're not going to see a major turbocharging the economy, but they will provide stimulus wherever they feel that growth is slowing down to levels that are not acceptable to them. So the downside risks that we were concerned about last year, the government has actually put a floor to that by saying, look, we will provide support to make sure that the economy continues to grow at a certain level. And you've seen first half of this year, our estimates are it'll grow over 5%. So in that sense, it's changed. But I think our view on China, even last year and this year, was that there will always be high-quality companies, particularly focused on the China domestic market, for us to invest in, and we continue to do that.
Temasek CIO Rohit Sipahimalani speaking with our colleague Avril Hong there. Take a look at how cryptocurrencies are trading at the moment, because we saw Bitcoin for the first time trading above 112,000 and really taking that broad risk rally to a new high. You can see right now at around that 111,000 level, but we have seen not only cryptocurrencies gaining ground, we have of course seen the likes of Nvidia, just broadly tech stocks moving higher. There's more risk sentiment right now across markets, despite the fact that we do have of course the uncertainty around President Trump's tariffs. For more cryptocurrency reporter Subhashri Ghosh joins us now with the latest. And Subhashri, I mean, we understand the broad optimism and the risk rally, but at the same time, have we seen any new developments around Bitcoin? I remember when President Trump came into power that potentially we could see a Bitcoin reserve or something of that sort. But what's the reason then for this incredible upside in cryptocurrencies?
Indeed, as you firstly mentioned, Shery, that it's driven by overall a broad risk rally led by tech stocks. But specifically to Bitcoin, I can say that the mostly the demand is coming from institutional investors and ETF players for Bitcoin, which looks like a sticky demand from them, and that is putting a floor and helping the Bitcoin prices to scale all-time highs. We've also seen this reflected in the Bitcoin options market, so if you see the Bitcoin options trading at the strike levels for July, end of July, is looking at $115,000 and $120,000 on Bitcoin, which reflects this underlying momentum in the market. However, I would like to add that in Asian market, it is slightly in a range-bound trading today, and there are some kind of downsides also being priced in at just below 110,000 for Bitcoin, and then the next downside is at around $104,000. So it's really trading in a ranged price band now with the momentum towards the upside.
What do we see in terms of the mood going forward?
The mood looks pretty kind of strong, to be honest, because the demand is coming from across in several kinds of banks and ETF players, as I was mentioning. So that looks like a sticky demand, So even if other coins we have seen in the past have been a little bit, in a range bound, Bitcoin has been the key driver, the mother of the entire crypto universe in terms of the price rally we have seen. So the mood going ahead looks like robust and strong.
So what's the latest when it comes to President Trump's crypto policies?
As of now, we have seen that there are the crypto. Actually, U.S. is driving the crypto rally. Most of the volumes are driven there. President Trump's pro-crypto adoption is actually seeing a lot of flows into the crypto market in U.S. We've seen several investments by the Trump family and the affiliated companies of Trump family into crypto, including one that was yesterday by Junior Trump rather. So the momentum has been pretty much driven by U.S. and if you have to kind of really speculate, we would say that going ahead as well, the Genius Act and the overall the bank charters, all that we are seeing in the regulatory environment in U.S. shows that the momentum is strong led by the President Trump in the U.S.
Cryptocurrency reporter Subhashri Ghosh there with the latest on, of course, that rise of Bitcoin past 112,000 for the first time ever. The latest now from the corporate front. Amazon's annual Prime Day sale is underway, but initial numbers from the 4-day shopping event are indicating weak sales. Brand advisor Momentum Commerce reported a 41% drop in first-day sales compared to last year. Amazon is betting on the extended sale period to give shoppers more time to navigate the millions of deals on its site. And of course, the reason that we watch this annual event is as it comes as a bellwether of consumer sentiment at a time when we continue to get these tariff uncertainties. Kellogg shares popped in extended trading with Italian candy maker Ferrero set to be closing in on a deal. Sources tell Bloomberg Nutella maker Ferrero is looking to buy the breakfast cereal producer for about $3 billion, and a deal could be announced this week. A Kellogg takeover has been in the works for several months, with Deal reporter writing in February that Ferrero was weighing a bid. Goldman Sachs is reportedly planning to ask its junior bankers to confirm their loyalty on a regular basis in a bid to limit talent poaching. Bloomberg sources say the bank will ask new analysts to certify every 3 months that they haven't lined up jobs elsewhere. The move is meant to get ahead of private equity firms signing analysts early in their on-the-job training.
Shery, take a look at what we're watching when it comes to trading in FX. We saw that pullback in the dollar after President Trump confirming the August 1st deadline when it comes to those copper tariffs of 50%. That pullback we're seeing being reflected across some of those trading pairs, including dollar yen at the moment, headed sort of around that high 145 level. We're also seeing the Aussie dollar there trading more or less flatlining at the moment. The euro, though, seeing some upside as we continue to see European assets, including equities, benefit from the expectation that perhaps a trade deal could be done and imminently. Having said that, though, of course, given all of the uncertainty, we've seen the sort of shock tariff rate of 50% being announced on Brazil in the overnight session, despite being, of course, a country that both has historic strong trading ties as well as running that trade deficit with the US. It seems to suggest that a great deal of uncertainty could still be taking place. Much more ahead here on the Asia Trade. This is Bloomberg.
Take a look at how Korean assets are trading at the moment. The Kospi gaining almost 1%. Morningstar now saying the Korean stocks are emerging markets' best bet over the next decade. Technology stocks tied to the AI boom, not to mention political will for corporate reform, helping that sentiment around Korean equities. The Korean won also strengthening against the US dollar. All of this, of course, ahead of the Bank of Korea's rate decision. It's expected to hold its base rate at 2.5%. Let's bring in ING Bank senior South Korean Japan economist Minju Kang. Minju, is it all going to be about financial stability for today's decision?
Yes, right. As market widely expected, the BOK is likely to hold as a policy rate at 2.5%. They're going to highlight, there are the rising concerns about this, the financial stability risk related to the recent surge in, Seoul housing market prices and also the household debt growth. So that's why probably, this is how are they going to communicate through the market. However, we believe that they are going to still assure the market that the BOK is still in the easing cycle. It has not completed the easing cycle yet.
When do you expect the next cut then?
We penciled in an October cut because we believe that August probably it is quite premature for the BOK to see the anticipated, the moderation in housing prices and household debt growth. So we believe that the more likely timing should be in October.
So tell us a little bit about the economic pressure that South Korea is facing right now, given, of course, that we do have the threats of tariffs coming from Washington. Okay, so we have the breaking news: Bank of Korea leaving policy rate unchanged at 2.5%, as expected by all economists surveyed by Bloomberg. All 19 economists had expected a hold, and there we have it, 2.5% for the Bank of Korea. And this, of course, as we have just been talking to Minju, really to do with that financial stability picture with rising housing prices in Seoul. But Minju, as I was asking you, though, I mean, the economy in South Korea is still feeling the pressure coming from potential tariffs from the Trump administration.
Yes, right. Actually, but also in the sentiment, we are seeing the sentiment indexes. Actually, the consumer sentiment and business sentiment has improved a lot. It's because of the normalization of more domestic political situation, and also lots of hope for the new government's strong willingness to boost the economy. However, there is like you said, the right about the quite a high level of uncertainty surrounding tariffs is going to hinder some of this recovery in the second half of this year. And also, the high level of, the debt and also the rising housing prices is going to be a more risk for the financial market and at the end. So that's why the BOK should have more very balanced view and also control the timing of the further rate cuts.
When you take a look at the briefing as well as the summary of that decision, what will you be looking out for, given, as you say, there is this tension in terms of the impact of external factors like tariffs, but also the sort of, price pressure heat that's been seen domestically?
Yeah. Actually, we expect that this today's decision should be a more unanimous decision to hold the policy rate at this 2.5%, and also we expect that for the 3 months forward guidance, we expect that fewer board members are more support for the additional cuts in 3 months time compared to the last meeting. So I believe that they acknowledge that the economy still needs more accommodative or a bit below than a neutral level of policy monetary conditions. However, at the same time, they want to deliver their message to the market that the BOK is going to be very cautious about the timing. And also, recently they have published lots of several working papers. It's all about concerns about the real estate market and also household debt issues, which is another way that the BOK to communicate with the market that their policy priority is given to those financial stability components.
Minju, really great to have you with us. Minju Kang there, Senior Economist at ING Bank. This as we have seen no surprise from the Bank of Korea, staying on hold, keeping that policy rate unchanged at 2.5% as surveyed by all 19 economists spoken to by Bloomberg, as these domestic pressures as well as tariff uncertainties continue to play out. More ahead on the Asia trade, this is Bloomberg. Take a look at what we're watching across commodities, particularly watching that copper price story as President Trump confirming that the US would begin levying a 50% tariff on copper imports from August 1st. Really confirmation of a move that will deeply impact producers of everything from cars to homes to appliances relying on copper. Bloomberg New Energy Finance seeing that it's unlikely that these prices that we've seen jumping for US copper are likely to be reversed. That's it for the Asia trade. Markets coverage continues next.